Welcome back. This week, the commercial real estate world decided to throw a party, and nobody brought the punch. Nobody brought the punch. Get it? Because punch. A recent survey by Berkadia revealed that 83% of multifamily investors intend to make acquisitions in 2025. This indicates a strong, long-term outlook for the multifamily sector despite current market fluctuations. The high level of investor confidence suggests that the multifamily market is perceived as resilient and poised for growth. Investors are likely anticipating increased demand for rental housing due to demographic trends and affordability challenges in the for-sale market. It appears that they believe even if the present is a bit rocky, the future is filled with tenants and bags of money. They must be planning some great deals because buying in a down market can lead to great returns. Amazon is broadening its healthcare footprint by launching Amazon Clinic in new markets. This initiative aims to blend virtual and in-person primary care, leveraging Amazon's logistical prowess to potentially revolutionize patient access and service delivery. That's the future Amazon's selling. I, for one, cannot wait to be able to rate my doctor on a similar page to rating a toaster. 4.5 stars. Amazon's entry signals a convergence of tech and healthcare, potentially reshaping how medical services are delivered and where. This could lead to a shift away from traditional medical office buildings and more towards flexible, tech-enabled spaces. The question then becomes, how will existing healthcare providers adapt to this new competition, and what will be the long-term impact on medical real estate? A Thai hotelier whose property was featured in a popular television series, The White Lotus, is capitalizing on the show's success by planning an expansion of their luxury hotel brand into the United States market. All right, this is peak influence culture in action. A TV show becomes a marketing campaign, and you know what? It's working. They're not just selling rooms, they're selling an aspirational lifestyle, a White Lotus experience. It's brilliant, if not a little cynical. But hey, if people are willing to pay for it, who am I to judge? Just don't be surprised if your hotel stay comes with a side of existential dread. Reports show a significant spike in commercial real estate loan delinquencies across the banking sector, reaching a 10-year high. This indicates that a greater percentage of borrowers are failing to meet their loan repayment obligations, signaling potential financial distress within the market. This isn't just a cyclical blip. It's a structural vulnerability exposed by rapid rate increases. The true insight here lies in the concentration risk within regional banks. These institutions are often heavily invested in local commercial real estate and are now facing a potential liquidity crunch. Are lenders prepared for the wave of distressed assets heading their way? Or will we see a repeat of the past financial crisis? Commercial real estate industry groups are actively lobbying against a proposed tax plan, arguing that it would severely harm their business model by significantly altering investment and development incentives. Taxes, the great equalizer. Or so they say. So the commercial real estate industry is up in arms about this tax plan, which targets things like 1031 exchange or perhaps the way depreciation is handled. Basically, they're worried about having to pay taxes on profits, which, let's be honest, might be a novel concept for some high net worth individuals. The proposed tax plan represents a potential shift in how commercial real estate investments are incentivized and is about more than just tax rates. It's about the future of the real estate investment strategy itself. Funding cuts and program freezes at both the state and federal level are leading to a significant slowdown in affordable housing initiatives, exacerbating the existing shortage of low-income housing options. Just to avoid confusion, this isn't the same Doge as in to the moon Doge. This situation underscores the importance of rigorous due diligence when considering public-private partnerships, or at least projects reliant on government subsidies. For developers, this situation reinforces the need to diversify funding sources and explore alternative financing models. For investors, it emphasizes the importance of understanding the political and economic landscape surrounding public housing initiatives. Data shows an increase in both apartment rental rates and occupancy levels across the United States in February, indicating continued strong demand for rental housing. Residential rates are up. Surprise, surprise. It's a classic supply and demand story, but with a twist. The demand is artificially inflated by a lack of affordable alternatives. So, landlords are raking it in while some renters are struggling to make ends meet. It's a win-win if you're the landlord. Reports indicate that the resurgence of office leasing initially observed in New York City is now extending to other major metropolitan areas across the United States, suggesting a broader stabilization in the office sector. We're witnessing a nuanced shift where quality and location are paramount. The real insight is divergence between prime and secondary office spaces. While top-tier properties are seeing increased demand, older, less desirable buildings are facing prolonged vacancies. This signifies a fight to quality driven by tenant preferences for modern, amenity-rich environments. Will this trend sustain, or is it a temporary blip in a long-term decline? The Federal Reserve is expected to maintain current interest rate levels in their upcoming meeting, while simultaneously certain consumer loan products are beginning to show a decrease in interest rates. The Fed's predictable dance, holding steady as always. The Fed is walking a tightrope trying to avoid a recession while keeping inflation in check. The real insight is the interconnectedness of monetary policy and real estate markets. Are we witnessing a soft landing, or are we just delaying the inevitable? And that's the commercial real estate news for this week. A wild ride as always. Remember to subscribe, like, and leave a comment. Or don't. I'm not your boss. But seriously, subscribe. See you next week.